Hi there, it's Mike Smith from Hawkeye Options. Delighted you could join us for today. And I thought it would be really useful to follow up what we were talking about yesterday. And we looked at the index as a whole, the S&P 500. We discussed two things really. We discussed the presence of this wide bar here from the previous day's action, and also this key level at 2120 that we noted was an interesting level right the way along from end of October 2015, and then retested again in April and in June. And so it was a key level, could become a key support. And what we saw, despite futures being down 0.6%, is a test of 2120 intraday. And then, as is often the case with the wide bar, we had a sharp move higher. So there wasn't a continuation of that particular trend. And in fact, created another wide bar in the opposite direction. Now, one thing that's really interesting with this is if we do get a break back above 2170, which essentially is the top of that wide bar, this is one of my favorite and most reliable bar setups, and it's called a pipe, and which is where you get a massive move down, high volatility move down, high volatility move up, and then a continuation back up again. And so if we do get a break higher from here, then we could see it back up to test record highs again. So just keep an eye on that. We'll keep monitoring and probably make reference to it as we go. At this stage, we would be very cautious playing any trade in this session. Futures are down again, but they are better than they were perhaps 2 or 3 hours ago. So keep an eye out for any break above 2170 with a potential move thereafter to test record highs again. If we have a failure to break 2170, we could see us retesting 2120. Very volatile market, very difficult to trade, and sometimes it's best just to manage the trades that you've got open and manage those well than it is considering new trades. If you feel you must place a trade, perhaps look at the SPY as the ETF and maybe look to place a trade underneath that resistance. Let's just put that up right now. And there we have it, exactly the same pattern, obviously. So we've got this pipe formation here. So we are looking for a break of 217.40 to the upside, and then we might look to put a credit spread down here, around about this 210, 212 level with an expiry less than 2 weeks. That would be the only trade we will be considering today, but only if the market moves higher. We'll see you again soon.